We are back in the black hole of real estate, and mortgage rates have hit a 10-month low, and I think I have a couple of ideas of why that's going on right now and what's next to come with the Fed. This is your host, Ron Wysakarski, for the black hole of real estate. And this week, interest rates hit a 10-month low. And those out there that might suggest it was due to weak job reports in the month of July or neutral inflation reports. Sometimes the home sale prices are moving, maybe past what they might be over the summertime as they head into the fall season. Those might give buyers some leverage in this market. And it might also be that there's just pent-up energy out in the market right now where people have said they've waited long enough for interest rates to drop. We've gone over this. And again, depending on which side of the aisle that you sit on, so to speak, you may or may not care about this. For me, I just know what the rate is. But there has been, zero interest rate reductions since the presidential election. But there were 3 consecutive rate reductions right before the election. So read into that what you will. We've talked about it over here. But right now, what I believe is with 3 Fed meetings to go and the Jackson Hole meetings just taking place, is that the Fed Chair, Jerome Powell, is giving a market forecast that it might be possible now to cut rates. Well, they haven't done it in a year, so I guess we're due. And it's interesting that last year, at this time, they did 3 consecutive rate cuts. Is it possible that they can go 3 in a row by the end of the year? Personally, I think it's 2. But there's still, and I don't think Powell is alone in this theory, there's uncertainty, and it's making it difficult for policymakers to really get a handle on where the market is going. But sometimes doing nothing, is a choice. And markets respond to the choice of doing nothing. So, they behave on their own. Now, what gets more interesting is that, is policy is what, they might refer to as restrictive territory. Are we seeing a shift in any direction, whether it's inflation or the economy, or just home prices? Let's look at that. There's a lot of tariff talk going on. So is it uncertainty, or is it just so much information we can't determine a direction? And I think that's where the Fed is right now. They've chosen just to watch. And that doesn't mean they're right or wrong. It just means they're watching. And I think this is where the good part comes. What I definitely believe is that buyers and sellers have made up their mind that they're done waiting. And if you think of rates between 6 and 7, which historically has been an average rate, if you will, when the big run-ups were going on in the early 2000s, that 2004 to 2006 or 7, that's where the rates were. They touched in the 5s a little bit, but not super low. And we know during, I'll just call them COVID times, when everything was artificially, depressed and pushed down, and rates were going down to 2s and 3s, that was manipulation. And the Fed felt that was good for the economy and the country, so they did it. Dropping rates dramatically like that or holding doesn't have to be good or bad. It just matters. How's the market going to respond to all of that? Now, we know that there will be change. It's inevitable. How soon it comes or what it looks like, it's debatable. I'm going to land on, I do believe that there will be 2 more rate cuts by the end of the year. And I had forecast that sometime during 2025, rates would dip below 6 at 5.875, and maybe end up the year 6 1/8, somewhere in there. I don't know if we're going to make it to that just yet, but I'm not ruling it out, because if there were 2, 3 rate cuts by the end of the year, it might just happen. And it's never in the way that you think it is, but overall, my mentioning, and you can look, go back to the podcast last November or last December, and the conversation was that it would come towards the end of the year, most likely after a busy or not busy summer buying season, as we get towards the end of the year. I think that's where you see most of the rate reductions. So if they actually come, then the vision, the prediction largely comes true. And with that, I think you're going to see some movement in the market to the upside. We've been paying attention to what's been going on all year long with home values. And in the first quarter, it was up about 2.8%. Second quarter, home values, if you look at year over year, home values across the country, a little over 3%, 3.2% in the second quarter. So we are finding that home values are up, about 3% running all year long when you compare the year over year. And now we're a little over halfway through the third quarter. And I wonder if those numbers will show the same. I think they will. And all along, the talk of markets crashing and prices plummeting hasn't happened yet, and I don't know that it will. And this is without any manipulation of rates up or down because they haven't changed. So if you remove the moving part of interest rates, the real estate market is responding to the conditions that are over there. So there's no relief on the financial side as far as the cost of your monthly payment. So it has to be coming from somewhere else. And I believe that a buyer and a seller both have to agree on a price that makes sense to each of them, whether or not you factor in the interest rate. And in some markets, close to half the purchases are with cash. That really takes interest rate out of the equation. So there's enough of a buffer in there for sales that are occurring without financing where the buyers and sellers can agree because there is not a disincentive to finance, let's say, at what they believe is a higher rate because there's no financing going on. Now, if we were to go a little bit further into, and again with the Jackson Hole meeting, I think if you were to read up on that, what you'd find is, that Jerome Powell, he's still concerned in his meeting notes that tariffs might cause some risk and that inflation might rise again. They'll use the term stagflation. I'm not sure that that's going to take place. I mean, the fact is tariffs could cause rates and inflation to stay the same, go up or down. And nobody really knows. We can guess. And maybe some of us are more educated than others and make a better educated guess, but they can still be wrong. And if you don't believe me on that one, I challenge you to look at just stock reports and stock analysts. Because every time a stock is sold, the person buying it thinks it's going up, and the person selling it thinks it's going down. So when you get multi-million, billion-dollar hedge funds on each side of a transaction, one of them's got to be wrong. So experts can be wrong, right? When we look at the Fed's benchmark rate, and again, this is the money that they give to banks to loan, they loan to banks, and then banks loan it to people, and they make some margin in between there. We're going to find out at the next meeting of the Fed in September. It's the 16th and the 17th. So FOMC, Federal Open Market Committee, if you want to type that in and Google that, or just Fed meeting. The next one's mid-September. So what we have right now is a good 3-week run-up to what we think is going to be a rate reduction. I believe that also you're going to see, since we're at a 10-month low for interest rates, it suggests to me that the market is actually pricing in a reduction that's going to come out in September. And if that's the case, when they actually make the reduction, if it goes down 0.25 point, you may not see a lot of movement on the rate because it will have moved in advance. So I'll say that again. Because the markets are pricing in the anticipation of a rate drop in mid-September at the next Fed meeting, they're likely moving ahead to make those rates a little bit lower right now to attract some market share for the banks, because that's how they make money. They buy and sell money, and the interest rates are a big piece of it. So could it be that the Fed got really aggressive and did a 0.5% drop? I don't think that's going to happen, but that would actually move a market. And as the monthly payments go down, buyer's power will increase. I think it further stabilizes the prices that have been rising all year long right before our very eyes. So the market didn't crash. The rates didn't do anything but pretty much stay the same. And you know what? And the markets were okay. We'll be watching, and we'll keep you informed. This is your host, Ron Wojciechowski, for the Black Hole of Real Estate.